Good morning, everyone. How you doing today? Michael Zuber, one rental at a time. And this is your daily financial news for Tuesday, August 17th. And yes, you are not seeing things. We are doing this extra early. Turns out I have some family responsibilities to get done between 7 and 8 this morning. And I'm hoping to get into our expert interviews at 8 and 9 o'clock. We'll see if I'm able to do that. But in order to do the daily financial news this morning, I had to get extra early for y'all. Got up at 5 a.m. and yes, no alarm clock. My body just was up. It's kind of crazy. But I wanted to make sure we got the daily financial news for you this morning because I want to keep this multi-year trend going. We've been doing this every single day for more than 2 years. So sometimes life gets in the way and I need to adjust, and today is one of those days, so we're doing it at 6 a.m. Pacific instead of our normal 7:30. So again, I expect to be back tomorrow at 7:30, but we shall see. So before we get started with the daily financial news, and yes, I've already done an hour of reading for you, I want to congratulate Ronald and Chris for getting their first or next rental property. Again, if you know what this is a contest I have to see if I can't help get 500 transactions closed this year. By help, meaning, hey, if you're a subscriber to this channel and you think one rental at a time helps, let me know about your deal. I'll send you a card. You read my book. It helped. Let me know that you got a deal and I will send you a card. And of course, if you're one of my students in my free course or paid course or mentoring course, whatever it is, and you close a deal, I want your address and we will send you one of these. It is Tuesday. That means I should be speaking with the lumberjack at 8 and Omar at 9. I certainly will be ready for Omar at 9, but the lumberjack, I might be a little late, maybe 15 minutes late or so, so I will play that by ear. But got a whole page of notes for you today on the daily financial news. And as we indicated on Saturday in our week ahead, retail sales was going to be the big number of the week, and we got it today. U.S. retail sales came in lower than expected. There was an expected drop of 0.3%. It actually nearly quadrupled that. It came in down 1.1%. Now, people are talking about lots of reasons. I actually think we as consumers, we have to look at 4 things. I think there are 4 contributing factors, and we shouldn't overreact, but I think there are 4 things we should think about. One is obviously we have had a growing recognition that this crisis we are in is not over. We have had mask mandates come back in many places. We have had constant bombardment of negative headlines about parts of the country that are suffering significantly from the Delta variant. So there's obviously fear growing. So we have to figure out how much of that impacted really July. It was what that would impact versus maybe early part of Q3. Number 2, this is where I'm at. This is the one I'm at. Sure, all of these have impacts, at some level, no question, all 4 do. But this is the one I don't think the media will talk about. And that is kind of what I'm seeing in the housing market, right? I've been telling you there's a housing slowdown going on. I've talked to real estate agents where buyers were at, they had 15 buyers ready, approved, rocking and rolling. Now they have 2. When I talk to them about why, they're telling me that people just took July off. The housing market was stupid crazy. They wanted to get out of what I'll call hibernation. People have been hibernating at home for too long. They wanted to go experience and have memories created. So what I think happened is a lot of people spent on experiences, which actually will show up in service numbers versus stuff, right? We stopped getting boxes from Amazon and Etsy and, the list goes on and on and on. But I think that had a portion of it. I think it's bigger than the media will play it, but we shall see. The numbers just came out about a half hour ago, so we'll see where the media takes this going forward. Number 3, we will have what's called payback. What payback is we had demand pulled ahead, right? A lot of people, for example, in housing were thinking about moving or thinking about selling their home or thinking about buying a second home So this crisis forced their hand. They bought early. But what happens is you create an air pocket where you don't buy a second one, right? So for example, if you were ever going to buy an RV or a motorcycle or one of those extras in life, you probably did it the last year, which means the Harley Davidsons and I think it's Thor Industries and all these other makers of stuff will, have a rough compare for a couple of years. So I think there's a lot of that going on, and we'll talk about some of that in Home Depot because Home Depot reported today, and I think it kind of talks about kind of payback. And then the fourth one, you probably hear some people talk about the loss of stimulus. We had 24 or 25 states cut off the $300 federal goose up in unemployment. So I think there's all four of those contributing factors. Again, fear of Delta, experiences versus stuff, payback for the demand pull forward, and then loss of stimulus. I think all four of those kind of point to a negative surprise in retail sales. But we're going to have to watch this going forward. And we have lots of earnings to look at this week. And again, it won't be about last quarter or be about their forward-looking statement. So real quick, we have Home Depot. And again, I think we're going to see a lot of this in retail. Home Depot beat top, which means they exceeded revenue, and they beat bottom, which means they exceeded earnings, right? Revenue, earnings. However, their same-store sales fell. Same-store sales rose less than expected. Expectation was for 5%, and in the U.S., they only rose 3.4%. Interestingly enough, Home Depot's transactions, the total transactions, fell 5.8%. However, they beat revenue and earnings because the average transaction was up 11.3%. That's not normal. A loss of 5% in transactions and then a jump in ticket price, you can explain that, but really the answer is inflation, right? Think about the cost of lumber in Q2, right? Cost of lumber in Q2 had yet broken and was still up 200 or 300% from previous. So a lot of these higher ticket numbers actually pose a problem for Home Depot going forward because the transaction fall is significant. And again, a transaction fall of 5.8%, that's going to make Q3 a pretty rough quarter for Home Depot going forward. So it'll be interesting to see what Lowe's says. I think Lowe's reports tomorrow, so we'll pay attention to that one together. Next up, we got Walmart. Walmart is a bellwether for retail sales. What you have from Walmart is they are picking up grocery demand. I saw a strong combination there. They also point to clients coming out of hibernation. People were throwing barbecues and they were buying coolers and all of these things, which really go back to the notion of people were doing experiences and not stuff. Again, and then Walmart, unlike Home Depot, Walmart actually said in their earnings questions, they have yet to see any change in consumer behavior due to Delta variant, which is good news. Back to our retail sales answers. I think the media is going to try to scare you. Oh, Delta, scary. It's an issue. Don't get me wrong. I'm not trying to play it down. I'm just saying they're going to go for fear where it looks like, again, Walmart is saying, hey, people are still shopping. People are still doing the thing. So that is good. Then we have Roblox, which is really going to highlight consumer changes. They're stopped hibernating, to steal a quote from Walmart. They missed top, which means they missed revenue, and they missed bottom, which means earnings. That is not good. And what they're seeing is people are spending less time at home. Again, back to retail sales, experiences, not stuff. I think that's what's going on. People are getting out and enjoying the sun. Don't know if you saw this yesterday, but the S&P officially doubled from the pandemic bottom, which is interesting, which makes it the fastest bull market since World War II. A little known fact I caught on to yesterday. Don't know if you're watching this, but China keeps ratcheting up their, I don't know what I want to call it, intrusion maybe into business corporations. And now they have kind of set up more different and tighter rules of the road for companies, and they're successfully wiping off $50 billion in market cap of tech stocks like Alibaba, Tencent, and the like. Again, back to the people that think China is going to take over and become the world currency. No, the rule of law means nothing. They can change rules overnight, and if they want to shut you down, they shut you down. So not going to happen. Saw some news out of the UK, the United Kingdom, that we should pay attention to, because I think this is where we are going. This is the boiling pot of water that I think is starting to, I don't know what you call it, simmer, or it's starting to get hot. It looks like the UK wages are up 7.4%. And there are fears that these rising wages will eventually hit bottom lines and businesses will have to raise prices. This is the dominoes that I see coming. This is multi-years in the making. This is where we get real wages going negative when you have 7% inflation but only 5% rise in wages. This is the problem I see in the future. In addition to that, the UK has a very strong jobs market. Their job openings are actually up 168,000 to nearly 1 million. Their unemployment is down to 4.7%. And now the Bank of UK, or Bank of England, is talking about their first interest rate rise as early as the summer of 2022. What I see going on is I think the economy is starting to really get going and firing on all cylinders around the world. I believe interest rate rises are going to come earlier than most are indicating. For example, in the US, I believe tapering starts this year, and I think interest rate rises are next year. The good news is I have been sharing that opinion for more than 6 or 7 months. You can go back and look at our daily financial news for that as well. And then lastly, I found an interesting article about how much money, cash, people think they need at retirement. This was done by Trans-America Institute. They ratcheted it or did it by baby boomers, Gen X, millennials, and Gen Z. Right, that was the category. It's about 2,500 folks. By no means a complete or exhaustive survey, but again, surveys about money I usually read. I don't know. It's a compulsion, I guess. But what it found out is people on average across all 4 age brackets, 1, 2, 3, 4, 4 age brackets, the average was $500,000. And again, this is at retirement, so think 65 years of age. That is much, much lower than I expected. The baby boomers were the highest at 750 grand, and Gen Z again was the lowest at 300 grand. Didn't really have a chance to read into why that is, but nobody said $1 million. At least no age group said $1 million. I'm sure individuals did, but I found that to be very, very interesting. And that's what I got for you today. Again, I've got some family responsibilities to take care of today, so we are doing this extra early. I will be back with you tomorrow at 7:30. And I hope to be able to still do my expert series for you, which is a 7-part series with multimillionaires every week for you at 8 and 9 today. So we will see what happens. Take care. Thank you very much. Have a wonderful day. Bye.